We have so many news and so much uncertainty, and that's complex, the thing. So I think it would be premature to say, well, we know exactly what's going to happen, and so you have to be prepared. And I think markets are taking it well right now, but there might be more volatility. But in my view, volatility is not your enemy. The lack of sometimes it might be your friend. I think a lack of preparation for volatility is your enemy. So if you're well prepared, you can deal with volatility, and then it can be your friend.
I mean, for FX guys, I mean, that's how they make money, right? They love volatility. But let me ask you, right, as a CIO, probably one of the biggest things you're watching is, all right, the daily news flow, the ins and outs, the stops and starts of tariffs, et cetera, but more, look, what is the long end doing? What is the 10-year doing, right? We're just coming off the back of a global bond market rout, right? There's still that 5% number on the 10-year that folks are worried about. What, Scott Bessent's been quoted saying, look, when the president talks about wanting lower rates, he doesn't mean the Fed. He means the 10-year, and that's what I'm focused on as well. In other words, I want to bring it down, so don't worry. Are you as confident or comfortable that he will be able to do that? Because everything Trump is trying to do seems like it's meant to or going to result in the 10 going up.
I mean, I think you would be a fool just to assume, you can control the long end, right? So I think that's a big elephant in the room. We have a lot of issues on the table. A lot of the policies of Trump might prove to be inflationary, and that might be an issue for the long end of the curve. And I wouldn't rule out 5%. So that can easily happen.
Oh dear. Okay, Mence?
Yeah, and while equity markets certainly wouldn't like the prospect of staring down the barrel of getting to 5% on the 10-year, Felix, even at now over 4.5%, does that start acting as a brake on equity market gains?
Not yet, no. I mean, we have already seen the 4.8 or 4.9, and of course, if you see a sharp move, that would be a break on equity markets or a clear headwind. For now, it looks kind of okayish, but we have to monitor it definitely.